Hey, welcome to Trading Group 1. Today is the 19th of April, 2021. So welcome everyone. It looks like Wayne's here, but not here. Are you able to talk, Wayne? Perhaps not. Okay, I guess I can go through a couple of things I updated on the website, just so you guys know what's going on. I'll share my screen real quick. See, now it's completed. All right, share screen. Okay, so you should see my screen coming up here. So I've been working on just kind of cleaning up some of the tools like this standard deviation calculator. That's actually the most popular tool on the website. So just kind of reformatting it and making it more mobile friendly. So like the instructions now go down the bottom. I added this new comment thing from, what's the name of it? It's HYV something. I probably can't pronounce it. Let's see, another one was, oh yeah, this forex position size calculator. I'd never actually finished putting it together, but what I did is, so you put in the price of the currency pair you want to look at. Like say I want to trade the British pound US dollar, and that's trading right now at 139.85, call it. Now, if my account that I'm trading in is also in US dollars, which is called the quote currency. So you can see here, when you get a currency pair quoted, the base currency is on the left, the quote currency is on the right. So if your account, say at Interactive Brokers, is US dollars, and you're trading British pound US dollars, and the quote currency is the same as your account balance. So you just copy. So that just puts these the same. And say your account is 25,000 and you want to risk, say 5% maximum, and you're using 40 pips for a stop. Now you want to trade 17,876 British pounds, which would be 0.179 standard lots, mini lots, and micro lots. You can see those, but that just gives you an idea of how much should you trade. And I use this with like Maverick FX when I'm trading with them on the forex. They want you to keep your risks under control, like most directional traders. But say you're trading a different currency, like say you want to trade the British pound euro. So let me get a quick quote on that. Let's see, British pound EUR. So right now that's trading at, call it 116.32. Let's see, where's my thing here? So 116, oops, 32. And then you got to get your, so the euro to the US dollar, because my account would be in US dollars, but the quote currency on this pair is the euro. So I have to go look at what is the euro at. So let me go look at the currency list I've got here. So the euro is, I call it 120.22. So 120.22. So now in my US dollar based account, if I want to trade the British pound euro pair, I need to buy 17,877 British pounds on that pair to properly size it based on my stop and my risk parameters. So this all works now, and it's yeah, it's much better. So it wasn't finished before. So I've also added a lot of these breadcrumbs. So those are kind of scattered throughout the site. What else have I been working on lately? I'm just kind of cleaning things up. So that's basically, I just wanted to show you that real quick. I did have an idea with the boxcar trade too. And I see Tim's here. Hey, Tim, did you get my email and or Skype messages?
I did just now.
What do you think?
I'm just getting up late, getting going here, so sorry. Well, maybe I need to think about it a little bit. You know,
I'll let people know. Just if you didn't know, Amy is going to be starting the Timezone Trade Alerts probably in about the 3rd week of May, but she doesn't want to run 2 weekly trade alerts at the same time. So she's going to end the boxcar trade. But I know, Tim, you've been trading the boxcar for quite a while and you used to run a trade alert service with the road trip. So it might be a natural transition for people if they want to keep doing the boxcar, because I know a few people, that's like one of their core strategies and they just hate to kind of give it up.
yeah.
You know, if you're willing to do that or interested in it, that might be a way for people to keep going with the boxcar trade alert service, since Amy's going to kind of back away from that to do a different one.
Okay, yeah, and I've talked about it extensively in the beginner trading group too over the past months.
Yeah, you've got a lot of expertise and experience with it, so it's a natural fit if you want to do it.
Okay.
Just let me know, think about it, and we'll talk to all the people that are in that right now. But it's a good trade. I like it. Dan Harvey's trading it a lot, I know. In fact, Dan came up with it, so it's another classic Dan Harvey trade, along with the road trip and the weirdo, right?
Yeah. Yeah.
Yeah, so just a possible solution for the people that want to keep doing a boxcar trade alert service.
Okay. Well, yeah, let me hang on and we'll let you know.
All right, great. Yeah, just think about it, and I'm sure people would be happy if you said yes.
Yeah.
But it is a commitment, so not to put you on the spot, but just think about it.
Okay.
So how's everything else going, Tim?
Oh, pretty good. I just found out I'll be flying again today. There's that.
Oh, what are you
And
doing?
Saturday, another guy called up and says, "I'm going up in a glider. You want to go?" And I said, "Sure." So we went up to about 20 miles east of Arlington, which is in the mountains here, and we had a 2-hour glider flight. It was really cool.
Oh wow, I've never been in a glider.
Oh,
I've seen videos on YouTube, but it must be pretty cool.
it's pretty cool and it's really quiet. It's just a little bit of whistling in the wind, and other than that, you're soaring, and it's great. It's I did it a lot about 20 years ago. I am not active right now, but we had a good time.
Well, they do a lot of glider flying out at the Air Force Academy, which is just 3 miles west of us. So we see them taking off all the time with a tow plane with a glider in tow.
Yeah, you should try it.
Yeah, maybe I will.
I told my friend this is really bad for my pocketbook, you know.
Right. Yeah, I built the website for the Aero Club at Pierson Air Force Base, and I need to add a feature to like find a friend to go fly with, kind of thing.
Oh, that'd be cool. Yeah. Yeah.
Yeah,
So, because a lot of people don't like to have an empty seat if they don't have anybody with them. And so, yeah, it's cool.
right. So as far as your trading going, what do you have open right now besides your covered calls?
Nothing. Let me think. Yeah, nothing. I'm still kind of on vacation, you might say.
Oh, okay.
But I'm keeping up with the calls, so I'm every week I'm selling some and rolling some and all that. Still have a whole bunch of them on. And in my beginner group last week, we talked about morphing, which is something that's what I call it, where you can take a put credit spread, for example, and with one trade, turn it into a put debit spread or a butterfly, or you can diagonalize an iron condor, all with basically one trade. And it's a popular topic because there's uses for doing that kind of thing. If your opinion changes on a credit spread or debit spread, and or if you've got a credit spread in trouble, you can butterfly it and lock in no further losses, kind of thing.
Right.
Anyway, it was a good topic and everybody enjoyed it, I think, and felt good. So morphing is something that I talk about once in a while.
I did have another piece of news. I got to find it. Daniel's been working on well, he he was working on a signal generator for a while, and then he was having some problems with it, so he kind of paused it because he needed to trade, make some money for his own medical expenses and stuff. But he happened to find an older copy of ExperCharts that had the signal generator working. So he was converting it to his latest compiler. And he sent me an update last night, and he said it's basically done. He's just monitoring it this week to make sure it's stable, but he said it generates lots of pips. And one of the issues with the software in the past has been that most of the indicators that Daniel uses will self-adjust himself back 1 to 3, maybe 4 bars sometimes. So, you'll see a great looking signal on a historical chart, but in real time, that signal may come and then the market shifts and then the signal disappears. So it makes it kind of hard to trade. But the signal generator doesn't do that. It's just, it's a signal, and, you just trade it. So let me see if he sent me an image of it. Let me see if I can find it. I think this is it. Yeah, okay, let me push this over to this screen. So this is the version of the software that he said is basically done. He's just going to monitor it for a couple more days, and then he'll send me a copy of it. But you can see this looks like, see 7:30. That's probably what, 5 to 10 minute bars. But every 5 minutes it's updating, and the engine's either long or short. So you can see here it got long. Where is it? Last entry 22:15, which would have been like right here. It would have gotten long, and that was at the time he sent this, it was up about 60, 70 pips, and it's subsequently gone higher. Right now it's at 39.82, so it's up another 100 pips. So this thing was just a monster with pips. So it sounds like I should be getting this later this week. So the people that are in Expert Signals should be seeing some pretty cool signals coming up very soon. But anyway, that's imminent, I think, because he said it's basically done. He's just tweaking a couple of thresholds, and then he'll send me a copy. So that's pretty good news. What else was I gonna say? It looks like we're kind of flirting up here with the high. So I see Dave's here, Dave Thomas. How is the flux trade going with this market running up like this?
Yeah, hey, good morning, Tom.
Morning.
Yeah, it's the well, actually, it's kind of an interesting day today. We had 2 weeks ago we had put a trade on, and because of everybody and thought that we were going to be getting a little weak in the market, and of course what does the market do but just keeps going. So so the bias on that was incorrect, although it was probably the highest probability trade you could have put on. So last week we went back to kind of normal things, and we were able to make back pretty much, if you would have gone in with the normal size, you would have made back what we had lost the week before. So we're kind of break even for the last couple of weeks. But I wanted to let you know that actually we're announcing kind of a soft announcement, is kind of a Flex 3.0 today.
Oh, really? Did you want to share your screen with anything?
It's not for public. It'll be announced to the group tomorrow. But it's in some part. I'm glad actually Tim was on the call here, because part of it was I had talked with Tim some time ago about I had some software requirements to try to look at some different ways of being able to look at charts and looking for back testing purposes, for looking at what had happened in the past. And
Right.
So Tim was able to, so even though you might think that he was always just up in the air flying, he was actually spending some time at the computer doing some coding. So,
Well, that's a good thing.
Yeah, so we talked over the weekend, and I had started on my back testing last week, but then actually was able to, it's not fully completed, but it's a good portion of it was completed over the weekend. And it's basically a total changeover from the rule set that I had before. based upon the data that was coming from, all the statistical data coming from how the what the RUT, the SPX, whatever kind of a thing that you're doing, how it has performed in the past, and taking into account gap kind of situations, gap and run type situations, and taking that and looking at on a long-term basis and incorporating that into a different rule set. And that's what I was back testing and coming up with, I think, some very pretty good results. And so I was going to be, like I said, it's going to be kind of a soft release tomorrow to the group when I have my group session tomorrow with the Trade Alert Service crew. And like I said, and it's soft because I haven't finished all of the back testing yet, so I want to see if I can get a little bit more done. But the results to date have been very encouraging, and it's basically just taking as part of the Flex program. I wanted to be able to have it so that as times do change, that you had the ability to be able to adapt and be nimble as to what happens. And part of that is, of course, some part of it is just you could create a hypothesis of what you think might happen, but to be able to sit down and actually, as Tim and I were looking over the weekend, and actually take a look at the data of what's happening. And Tim created, I think, 3 different software programs for me to be able to look in TOS at all this data, which created some fantastic results. Whether good or bad, it just at least gave you the data to then take that and drive the creation of a better rule set. And then now I'm taking it and now not form fitting it, but I'm taking the new thoughts and now taking it through the whole time frame and back testing it. And like I said, so far the results are very, very encouraging, significantly better than when we have been doing. So that's so we'll see over time.
So when you say significantly better, do you have a rough comparison? I mean, not exact, it's the rough idea.
Well, if you take a look from, I think if you take a look from November 30th through now, you could probably take a look at what we've got in there. So you know what the current is.
I mean, the Flex performance?
Yeah.
Oh, okay. Let me pull that up.
I don't have that on my fingertips, but I know you do.
I'll find it, yeah. Let's see here. It's coming up. Oh, I'll just go into the Flex history.
Yeah, I mean, I think it's up just like a few percent. If I'm.
Yeah, it's up 5% total.
Yeah, whereas, and then the comparison is the things that I'm doing for the exact same time period is up about 39%.
Wow, that's a big difference.
Yeah, it's significant, and it's not surprising to me because obviously, as it's all a matter of risk, and so, but the thing that I didn't have was the background data to support it. And with the software charting that Tim was able to provide me over the weekend, it provided me, I had some thoughts what I thought it might be, but this then now gave me the look-see where you can look back 3 months, 6 months, 12 months, 5 years, 10 years, 15 years, 20 years, as to how things are doing. And it really gives you a good perspective of basically, how close can you get to the money over time when you start to put on trades? Because obviously, the closer you get, the better opportunity you can be able to make some money, at least from the premiums available. The trick is how often do those things happen? The big moves and all that stuff. So with that information, and data is king in this case. As opposed to just having a thought and just trying something and just trying live and just say, well, this has been working good for the last 2 months. I've been able to now go through and trade it right from the beginning of the Flex, which was basically November 30th. So it isn't a long time, but I'm taking that and extending that back and doing more extensive back testing. But the more that I do, it's keeping very consistent results, which is really great to see.
So has this changed more dependent on a certain type of market, like high volatility or low volatility?
It's a combination. It's more matching basically if the market is moving, how much is it moving, how violent is it, and then being able to adjust in that time frame how close or not so close you would get with your entries, but also how you would be managing it over time. So many times we'd be taking trades right into expiration, and this probably only a third of the time do we end up actually having trades going into expiration. But we also have more resetting of the trade during the time frame. So
I mean,
so
like
it's
rolling a whole butterfly up or down kind of thing?
absolutely. So you're being much more nimble with the market. But given the basis of, like I said, what I've been able to see, I came up with literally a yellow line sheet of paper with all the rules, and basically I've taken those all and now put that into the back testing mode, and that's what I've been doing very heavily since mid part of last week. And then over the weekend, Tim was able to give me these software tools, which then gave me confirmation and some tweaking, but mostly just kind of confirmation of what I thought was happening. But it was really, really nice to be able to, it's nice to be able to show people that and be able to say, look, here's really how the market has reacted. And here's where we should be concerned. Here's where we don't need to be concerned. And when there isn't as much of a concern, it's a good time to be able to try to make some money. But if it is a concern, then you need to back off a little bit. So it's so I'm kind of soft naming it, kind of like I had the original flex, I'd say, the original flex. And then when we changed from the rut to SPX, to me, that was kind of a major change. That was kind of flex 2.0. And now for me, this is kind of flex 3.0 because it's incorporating a complete new set of rationale going into it. And it's providing also when to be able to be in, when to be out, and also while you're in, how you're able to manage it better while you're in it. So anyway, so that's the good news, and hopefully maybe a few folks may want to tune in tomorrow if they haven't joined up. That might be fun to start off with something new, and if not, well, that's fine too, and be able to show you some results hopefully soon.
So is this new version, is this more or less active, would you say, as far as like number of trades or adjustments?
I would say it's a little bit more active, okay? Because most of the time before we would just let a lot of trades just expire, okay? Whereas now they might be actually trading out of the trades, like instead of just letting it expire on a Friday, maybe on a Thursday or a Wednesday, you might have to trade out of it.
Okay. But overall, it's fairly close, it sounds like.
Oh, if I would say there was maybe about a third of the time, if I looked at, an easy indication is you take a look at what your commissions are. And I saw probably about 2/3 of the time we had very standard commissions, and about a third of the time we had probably about double the commissions because of more.
It's the rolling.
It's the rolling. That's exactly right. It's the resetting. When you have market movements, whether up and or down,
Right.
you need to be able to adjust. But the thing is that if you have the information that, like I said, that I'm able to see now, and it's just not just, but it's ThinkScript code,
Right.
to be able to put that in place. It's really, really cool. It's very, very interesting. And you take that and adapt it, and then wrap a set of rules around that, and then go in and go hog wild back testing it to see how it works out, and keep to it. You don't try to modify it as you're going. You don't try to do any form fitting and stuff like that. Just you get your initial set, test it, and see how it comes out. If you need to change something, and you need to go back and retest everything, and that's exactly what I've been doing.
Well, very cool.
Yeah,
Well,
so that's
look forward to how the results are going to change.
Yeah, we'll be like I said, we'll be starting our first trade today, and I have a little bit of writing to do to be able to inform the group because, like I said, we have our meeting now on Tuesdays. We used to have it on Mondays, but so I've got to be able to kind of advise people and a little bit more than normal today.
Well, sounds good.
Yeah, no, I'm really looking forward to it, and it's exciting. And as a matter of fact, I spent about 2 hours yesterday going over it with actually with my son, who did some of the help and some of the work, back testing and such. And it was really good because, you know, it's always nice to be able to play it off different people. And because, you know, you know, it's good to be able to have, you know, co-creators as part of the you know, as part of the creation process, because you know, you get good input from people that are also good traders and have been doing this for a while. So
Yeah, I've
so
found
anyway,
over the years, the more you share with other people, the more you get back, and you know, it helps you more ultimately versus just keeping it all to yourself.
well, absolutely. I mean, that's why when I was chatting with Tim about this, probably about, I don't know, a month or so ago, we, you know, we talked about this, and you know, and you know, he looked at it and said, okay, yeah, I can see where this would be, you know, beneficial, you know, to, you know, not just a flex trade, but also for just general information for, because it doesn't matter if you're doing an index, a stock, you know, it does whatever, but it gives, you know, some good information. And so, you know, because I was able to, like I said, I had some theories of what I thought it was going to look like, and started doing some back testing to that, but then the information, you know, was very visible on the screen. And so that was really, really cool to see. And I thanked him for that. I thanked him over the weekend as well. And anyway, so I just want to let people know that this will be starting actually with a live trade today. And we'll be rolling it out, kind of a soft rollout tomorrow to everybody. And then, you know, we'll be, and the reason for that is because I want to do just, you know, with me, I like to just do more and more back testing just to try to make sure that everything is, you know, working the way it is. But what I've seen so far is enough for me to be able to, you know, start, you know, a soft rollout today.
Well, we need to get you on a roundtable to kind of let the general population know about it
Yeah, well,
when you're ready.
yeah, no, it's like I said, I'd like to probably get a little bit of live trading of it. Probably would be be prudent, and then would be, you know, happy to do that.
Okay, great.
And for anybody that obviously wants to, that who either had been in the service before and isn't in it right now, or whatever, if there was some interest, you know, feel free. Can join in at any time, as they say.
Right, the more the merrier.
That's right. That's right. So anyway, that's about all I got for today, Tom.
Well, very cool. I know I got an email from Tastyworks, and they offered to have one of their on-air personalities come speak to us. So if anybody has any requests of who at Tastyworks they would like to have speak, let me know. I assume Tom Sosnoff is one of them, but I don't know who else is there. If you have any ideas, let me know. I'll send them a request if I get a couple of people letting me know. Otherwise, I'll just see if maybe Sosnoff can come talk. I had lunch with Charles Cottle a couple months ago. He was dropping off a pool table to a friend of his near Boulder, but he said they used to be in Tom Sosnoff's house. So it was this little connection there, kind of funny. Let's see. Now I see Wayne's here. Are you able to talk now, Wayne?
Hi.
Hey, morning.
Good morning. How you doing?
Oh, pretty good. Busy.
Yeah, I hear you. Same.
How's what's going on with the sleep well these days?
Oh, it's just doing its thing, rolling around, dealing with markets. We had one of the fastest dollar deflationary periods in history. I swear it was like there, and looks like it's going away. So Looks like we're gonna start shifting into a different macro environment pretty quickly, which will be kind of cool, actually.
Yeah, it looks like the currencies are all rocketing up today, which usually
Yeah.
means the dollar's going down.
Yeah, that's about right. If we had this, I mean, we were protecting against a dollar inflationary environment, and it's always good to protect against it, just in case it ends up turning into something like 2014 or an '08 kind of situation. But actually, this is really nice. If anyone's been following the commentary or anything like that, a dollar deflationary environment, and then at the same time, bonds kind of hit their 2% in the 20-year, and so there's been some pressure on that, and so it was with if the dollar is deflating at the same time as that can get a little bit scary. And so once we started seeing bonds going up, we were like, ooh, this is kind of a bad omen. But now that the dollar's inflating again versus other currencies, the fact that bonds are going up is actually not an issue at all. Actually, it means things will most likely be peachy keen. So we'll kind of see how things go. It does mean that we're going to play it a little bit differently, but it doesn't mean that things are going to necessarily be a bad situation. Gold's probably going to be something on the horizon if the bonds start playing too. So we'll kind of see how things are going. They're still kind of all mixed up right now, so that's why you've seen the sleep all portfolio just kind of like just chugging along, kind of sideways, kind of mixed bag of things, because we really haven't had a macro environment that's just like stuck and shifted like we had back prior to the election and stuff like that. That was a really, really, really long macro environment. They don't typically last that long. The macro environment that we had after COVID, everything, I think that we stayed in that macro environment for probably, that was probably like a 7-month macro environment. That's very rare.
What's a
But
normal cycle?
we'll probably get like a quarter. Sometimes we'll only get like a month, but the typical one's probably about a quarter. We'll see a shift, and then it'll kind of shift out. If things start to shift pretty fast, sometimes we'll get, like I said, about a month, and that's what this one pretty much did. It just shifted out, and looks like we're going to shift away. So we got a little bit of a fake out, which is fine. We'd rather protect against it than if something actually really bad was going to start happening. We were pretty much ready to really start going into defense mode. And then now, once we started getting a dollar deflation, it's starting to give us a little bit of breathing room again.
Have you seen anything that's causing that dollar deflation?
This is just the dollar deflationary trend was very against fundamentals with as much as we're printing, with as much as there's now stimulus coming out of politics, right? So we're getting a little bit more of like state-run capitalism out of our government, which is a very interesting shift for our democracy. Anyways, that all kind of goes back to very much a shift or a dollar inflating environment versus other currencies.
Right.
So, yeah, you can see back there back in March or February, sorry, like end of February, that's when the dollar really started taking off. We started paying attention to it then, and then once it started going up with that type of magnitude,
Like here.
and even over the second leg right there in mid-March, that was really starting to be a cause for concern, because that's a really strong strengthening dollar in an environment that all of a sudden bonds were starting to turn around too. So that was but now that the dollar's kind of kicking back down, other currencies are starting to normalize, which is exactly what we've been talking about in monthly trading groups, and even on this a couple times, that the last half of this year will most likely be a pretty strong dollar inflating environment, which will be nice.
Yeah, it's interesting that if you compare the UUP ETF to the US dollar Swiss franc, it's pretty close.
Yeah, well, I mean, UUP is against all of our trading partners, so there you go.
Well, and like most currencies that I trade are the base currency within the quote currency is the dollar, but the Swiss franc is backwards, so it's the dollar priced as a Swiss franc.
Right,
So
right.
so it moves the same way as the dollar, but these other ones move inversely. So when the dollar goes
Hmm.
down, these pairs go up and this one goes down, which is what you can see here. Those are green, that's red. That's very typical.
Yeah, that's beautiful. I actually like that USD. Yeah, against the franc. That's actually a really beautiful way to look at it. I wonder if what the correlation is going back with UUP.
I bet it's pretty high.
I bet you're right.
It's very high, I think.
I bet you're right. Going back a long time, I wonder what that correlation is.
Let me see. Here's a long-term Swiss
Well,
franc,
there's
and
maybe
here's
a
the,
little bit of difference.
ah,
Yeah,
that's pretty tightly
it's
correlated, I would
it's
say.
tight. COVID was definitely a vastly different situation, though. Look at February 3rd. You took a massive dive. You never made it up to new highs, whereas
Yeah.
you took a big spike and you were hitting new highs for a little while. So a little bit of difference there in the chaos, which is probably because UUP is a little bit more diversified. It's against all of our trading partners just versus one country.
Let
And
me
that's
go on like
why,
here's like a weekly.
yeah, there you go.
Oh, that's a little bit
Oh,
weird.
UUP doesn't go back that far.
Oh yeah, okay.
UUP stops at
Spring.
08, I think.
Let's see. Yeah, 08, 07 sometime.
Yeah, there you go.
Yep. So if I stretch that out, there we go. Yeah,
Yeah, and you can actually see from this chart like how quick and short this dollar deflationary environment was. It was just a little blip
just
on
a
the
blip.
radar.
Yeah.
Just a blip, you know. You never know when they're going to turn into something like I mean, look at '08, for example, right? That was a huge, massive dollar deflating environment with bonds turning the other direction. So, that's a really bad situation. Same with the 2010, early 2010, that was a big, strong dollar deflationary environment. Those are the types of things that we watch out for because those are the ones that make growth assets like stocks a little bit more susceptible when you start seeing some moves into other assets at the same time. So that's what's been going on. Also, I'm still I'm compiling live data, like as far as what's going on and out of data sample tests of the Sleepwell macro sector trade,
Mhm.
and it's looking really beautiful. We would have called some tech and healthcare over the last, I guess over the last, let's see, what is it, over the last month, and they're still one of the top performers as far as that sector goes. So looks like the out of data sample test is really doing phenomenally for the last couple years. Let's see.
So I know we've talked about a market sector kind of thing. Maybe you can just tell people kind of what we're thinking about.
Yeah, we are still working it out. The whole concept behind it is where we take the macro environment and the indicators and the data that I compile for the Sleepwell portfolio. And what I've seen over quite a bit of period is that certain types of businesses and stocks perform better in different macro environments. And we're going to leverage that to actually trade them. So we'll trade, the highest outperforming as far as just a simple trade. The idea is that the trade alert service would be where we trade the top sector all the time. And it's just a single sector. It's just a single trade type of thing. And then it's going to be long short. I believe I'm going to do a long short version because there are times where the macros are significantly against the S&P and you want to short. And so when the entire broad based is decreasing expectancy, you'd want to short the weakest sectors in that type of environment as well. And so that's what it's all coming down to. And the out of data sample tests came out really, really beautiful for 2020. So basically what I did is I stripped out all the data from 2020 and only looked at all of the data prior to that and then just applied it to 2020. So basically it has no idea any of that. So there's no back test relevancy to it because there's no data actually applied to that. And it did really well. In fact, it did really well in COVID. I would doubt that we would do this well on a year that doesn't doesn't have a massive macro crash in it. So it's kind of unfair. So that's why I've been wanting to collect a little bit more data here into 2021. So that way we could see a little bit more of a reasonable year, because in 2020, we ended up doing, with no leverage, long, short, we ended up doing 180%. And then and then just only long, we ended up doing 77%. So, which is really good numbers. And we had a drawdown in that of, I think, 6%. So really beautiful numbers, and it looks like everything's working out exactly how it should. It's a little bit more of a trading mentality. It's still only going to be once a week though. So basically on Monday, we'll sit there and say, hey, what sector do we want? What's the ETF for that? We're going to go long it, or we're going to go short it. And then we'll kind of go from there. And then I'm also going to compile with that service, I'm also going to compile a broad-based macro expectancy for the S&P, and then I'll probably put up the top 3 sectors, and I'll probably put up the bottom 3 sectors, right? So for each one, so anyone that wants to use it for like, hey, you know, I want to do a road trip on this or something like that, but I don't want to get blown out to the downside, we'll stay in these top 3 sectors that are performing during this macro environment. So it's just like another arrow to the quiver of a trader. And then I'll also have it as a trade alert service for someone that just literally just wants to just trade a single sector and provide a little bit more alpha over just broad-based indice type of trading that has still significantly diversified risk, in the sense that it's not a single company, but it'll be into a single sector. So it's going to have a little bit more volatility to it. Should be to the upside though, theoretically. So
Very
I'm still testing it. I wanted to make sure everything's kosher. One thing that I don't do, anyone that knows me and anyone that's worked with me in the past, is I go through rigorous amounts of testing and live testing and out of data sample tests and fundamentals, and then I want to make sure that everything is going to act exactly like the data says it's going to before I ever say, hey, yeah, this is going to work, right? That's one really, really important thing to me. And so that's what I've been working on with this. And that's why I've said it a few months ago that I was going to do this, but it's just still work to just make sure that it's going to work.
It's a work in progress.
Right. But it's a beautiful work in progress. And I love it when theory lines up with actuality.
Oh, absolutely.
So, and I've been using it to trade myself. And so that's why I've like, okay, you know, live money, everything going on, does everything match? And so, yeah, it's been really beautiful. And I'm excited to eventually get this worked up. Tom, you and I are going to have some work to cut out for us. And I was definitely going to do it as an add-on to the Sleepwell portfolio service if someone wanted to choose it. And then I haven't decided if it's going to be a standalone service yet, though. So that might be something that Tom and I talk about.
I think it would probably be a little bit cheaper than most of the services we have, because it's a different type of thing, kind of like the Sleepwell. It's more for investors instead of traders.
Right. Yeah, exactly. It's meant to be something to add on to maybe something else that you're already doing. Everyone has a lot of, I feel that a lot of people have their own trading system that they prefer, and or maybe they have their own stock picking things. And it's just nice to have another arrow in the quiver that is basically going to confirm that, or give you a little bit more expectancy or probabilities and things like that. Those are always just nice things to have. And this is something that it'll be something that's totally not dependent on price volume volatility, which is basically what every other indicator is a derivative of. This is a large scaled macroeconomic view of what sectors are going to benefit from this type of thing. So that's kind of the cool thing about it, I thought.
Yeah, it's kind of exciting. I don't know how long it'll be before you're ready for it. I'm guessing at least several weeks, maybe a month or two. I don't know.
That's probably about right. I think that the limiter will probably be on actually compiling it into a service. So the work that you and I will do,
Yeah.
something that's usable to the end yeah, to the end user. That way it's like, okay, if this makes sense, this is what I can use it for. Also, just kind of getting some of the verbiage of what's the purpose of it, type of thing.
Right.
Yeah, I'm excited about it though. It's really, I loved what it did in COVID. I loved it's also something nice to just pair with the sleep well portfolio, just because it's got a little bit more alpha to it. It'll be long short, so it'll really be kind of this animal that's in the backdrop that is correlated, but it has some uncorrelation to it. So it's really beautiful. I'm excited about it.
Very cool.
Hey, Tom, I just got a real quick one for you.
Yeah, sure.
Hey, Wayne.
Hey,
I just want to make sure you were finished before I jumped in. I need to
for
run, and
sure.
I just wanted to throw one quick thing in here. I was just doing some, I just received a few comments, and actually I'm going to delay the actual first trade of the Flex 3.0 until tomorrow. Reason being is that I really wanted to be able to go over it with the group before actually putting on the trade, which makes a lot of sense.
That makes sense. Yeah.
So I'm going to, I just sent a note out to the group, but in case some people that are here that didn't hear it or whatever, I will be delaying that till tomorrow. So anybody that is in the meeting tomorrow will hear about it, and we'll be looking forward to putting on the new trade. And I did actually look really quickly just at the back test results, and just a really simple number, because these are all these are all weekly trades, meaning they're usually 3 to 4 days in total length of trade. So far, and all the back testing it's usually between about 1.9 and 2% is the average. And this is net profit. So this includes wins and losses. It's about 1.9 to 2% per trade. So that's what we're looking at so far, how the testing has been working out. So, and like I said, when we're doing those, once a week.
So it's a new one every week.
There's a new one every week.
And then I know at one point you were like putting them on like Monday or Tuesday, taking them off like by Friday. Are these the same kinds of things?
It's similar. And one of the things that I've learned from the back testing is that, for instance, I'll give you one little preview, is that if you happen to get in on whatever day it is, and let's say the market does something where it does something really let's say it does something really good for you, and let's say you're able to achieve your profit, what we'll do is actually take it, and then what we'll do is that we'll jump into the next trade the following day. So some of those, so for instance, if we get in a trade on Monday and we're out on Wednesday, we would start our new trade on Thursday as opposed to wait till the following Monday. So
right.
because of that, we've been able to get, as they would say in baseball, a few more times up to bat.
Right.
And so, but like I said, overall, and one of the key things is being able to look at the data and be able to also see when, not so much when it's a great time to be in, but also when it's a great time not to be in.
Yep. Cash is a position, right?
Yeah. So, and so there's a lot of new concepts in that to be able to actually just avoid, some parts of the market. There may be other times when the market isn't doing as well, where you could actually put on very beneficial things, kind of in more downside kind of situations. But that would be a further evolution of this. Okay, but that's not included with this. So, but that's a further improvement possibility.
That's version 4. Yeah.
Yeah, that's it requires more work. So just like with everything else.
Right.
So anyway, I just wanted to let you. Just a little bit of information there, at least for people to see. And like I said, it's been very encouraging. And I'll be going over with people tomorrow, and then starting with trades and going on from there. So anyway,
this is trading SPX.
This is trading SPX. Yes.
Okay. So probably not too many liquidity problems then.
Zero.
Yeah.
Zero. No. As a matter of fact, sometimes. The only thing that I don't like about it is that unfortunately with SPX, the commissions are more expensive than the Russell. So that's kind of a bummer from that standpoint. But given the, and I've been showing people this on various things, is, you know, we kind of chatted a little bit about this, Wayne, and during the session last Monday, as far as the relative movement of both the Russell and the SPX and all that stuff. But and the kind of trades that I'm doing, it's you know, to be able to deal with the bucking bronco of the rut was more during last December was fine, but then it just increasingly got more difficult. And so, so unfortunately, you know, we had to go with a little more expensive index, but at least it was a little bit, at least for the trades that I was doing, a little bit more reasonable as far as the percentage movement over the same period of time. So, but anyway, that's about it for today, and hopefully that could be interesting to some folks. And like I said, I went back and looked at the exact same time frame that we've been starting back, like I said, right back to November 30th, and put the same the new rules onto the same exact time frame, and was able to see a a huge improvement. And but like I said, the basis of that came from data that I was confirmed over the weekend, and that was really exciting to see. And that's really good information, because those kinds of programs, software programs, are always available to be able to use from now until to the future. So it's a great tool to be able to use in the creation part of trade design. So
What would you say caused the big change in the performance? Cutting the losses, or?
it was a combination of cutting some losses, but I would say the largest was being able to be more nimble and to know when to be nimble and reset trades and where you place the trades, versus just being scared about where the market is and what's happening.
All right.
And seeing what happens from a Monday to a Tuesday to a Wednesday to a Thursday to a Friday. Each one of those days is actually quite different. And when you're dealing with the absolute last week before expiration.
So if somebody wanted to follow the flux trades, how much of that time would they have to be around the computer to make trades, like adjustments or whatever?
We're only seeing basically trades once a day.
Okay. Is it a certain time, or is it kind of random?
I would say that typically the timing of the trades would be basically right at the end of the day, like 12 o'clock, like an hour, a half hour to an hour before the end of the day.
Okay.
The only thing that there is a special new thing that I'll be introducing to people tomorrow about something new being put into place that we will constantly have in place, and that is basically it's basically a protection for risk to the downside.
Right.
And basically some automated contingent kind of orders to have in place at all times to be able to make sure that we're, as opposed to having to be at your computer a half hour after opening bell, you could have orders in place which may in fact take out your position. Take out meaning just to
Close
exit,
or
to exit,
neutralize.
to exit your position. Okay. So, and those would be automated. So it doesn't mean that you have to be at your screen.
Okay. So if somebody had a job, they could probably still keep
yeah,
up with you.
as long as they could be on the, as long as they could access, Error Mirror and Thinkorswim at work. I know some people, like my son-in-law, he can't, because he works at a defense company, and they can't do it at work anymore just because of all the secrecy and all those kinds of things. He can't do it from work anymore. So
Right.
that's really unfortunate. But he has to literally get out of the facility on his phone outside of the building to be able to connect, to be able to do anything.
Oh, wow. That's
Yeah,
pretty
because
secure.
it's a very highly sensitive defense installation here, and he's one of the chief engineers, and so he's he can't.
Yeah, you don't want to be trading there.
No, it's just too much risk. I mean, there's too many people that want to find out secrets, so
Right.
so you can't risk that. So, but so that you raised the question, but so I'd say for most people it shouldn't be a problem, but I
Right.
know there are some people that can't do it while they're working.
Now I went when I was first in the Air Force, I went to navigator training because I had 20/30, 20/40 vision. And then my assignment was an F4 EWO, which is electronic warfare officer. So I had to go to electronic warfare officer school, which is 5 or 6 months. And while we were in the school, it's a very secure building. It's like working in a vault essentially.
Mhm.
But that they had a team, I think it was from Offutt, from SAC headquarters. They came and they parked like a van in the parking lot, and they were just like typing out like on a teletype kind of machine, like all the what the secretary was saying on the phone and stuff. It was it's just crazy stuff that they're doing.
Unbelievable. Well,
Yeah, and this is back in oh geez, the 80s. So I
mhm.
can imagine what they've got now.
Oh, I know. So, well, good. Hey, Tom, I gotta run, so
Yeah.
we'll talk
Thanks
to
for
you
the
soon.
update, Dave. Yeah,
All right.
appreciate it. Good luck and keep us updated.
All right, sounds good.
All right, and looks like we're pretty much at the top of the hour anyway. So let's, unless anybody's got anything at the end here, why don't we just wrap it up? Again, for the people at the Expert Signal, I'll be doing the weekly update in about 34 minutes. And pretty excited with this update from Daniel because it sounds like the signal generator is almost maybe here this week. So that's pretty cool. The sleep well is doing okay. Just remember, it's more investors, so don't panic out if you're not keeping up with SPY. Remember, you should be comparing it to our par or 60/40, and it's more for protecting you on the downside, but still decent profits as the market goes higher. So, and that's a good place to park your cash you're not using. Or and then one thing we forgot to kind of update you on, we should hear this week on an RIA on the West Coast. It's wants to trade it, and we're probably doing paperwork and stuff for that. So if you have friends, neighbors, relatives, coworkers, whatever, they want a better place to put their money than their mattress or a savings account, then that might be a good option. But for now, let's wrap it up. Everyone have a good week trading, and we will see you next week. I don't think there's a roundtable this week, so everybody see you next time. Thanks.